Okay, so pardon me. This is the starting to get towards the more important stuff that we need to cover today. So, looking at the accounting principles. So, there's basically two main guidelines that we look at. That's the principles and the qualitative characteristics. So, the principles basically govern the way accounting information is recorded, and then the qualitative characteristics inform the way accounting reports are prepared. So it's really this is a really important distinction that we need to make. So accounting principles, recording of information. So that's sooner in the process, and the qualitative characteristics is how accounting reports are prepared. So really important distinction that we need to make there. So that's that there. So moving on to the principles, there are 7 accounting principles. The first one is the entity principle. So the entity principle states that from an accounting perspective, the business is separate from the owner and other entities, and records should be kept on this basis. Now, as it says in this section here, this might sound like quite a small detail when we're talking about small business, because obviously the person behind the counter is usually the one that owns the business. So it might sound like it's quite trivial, but when we start moving up toward, into bigger businesses where you have multiple owners, the business is a separate entity for accounting purposes. Therefore, if we're removing money from the business to use for personal use, as we were talking about today, we need to record that as a drawing. Going concern principles assumes that the life of the business will continue and its records are kept on that basis. So this is actually a really important principle, and it gives us the ability to do a number of things. The first thing it does is it allows us to record or recognize transactions that occur over more than one period. So for example, if we had a transaction that occurred at the end of June, and so it was a credit transaction that occurred on the 18th of June, and the end of our reporting period was the 30th of June, we can assume that the business will continue as a going concern into the next period. Therefore, we can recognize those credit transactions. Again, if we are, if we assume that the business is going to continue, then at some stage in the future, we're likely to receive cash from these credit sales. So this also allows us to recognise debtors as the amount of money that a credit customer owes us, and obviously because it's going to give us a future economic benefit, we can recognise that as an asset, Micraso. Okay, so these two are actually quite closely linked: the going concern principle and the reporting period principle. So the reporting period principle states that the reporting period, or that the life of the business must be divided into periods of time that allows reports to be prepared. An accounting record should reflect the period in which a transaction occurs. So basically what we've got is a necessity to divide the life of a business into periods so that reports can be prepared. So we can prepare a balance sheet, and we can prepare income statements and things like that. So obviously, because the business is a going concern, it's going to continue indefinitely. We can't wait till the end of the business's life to calculate our profit, because we're assuming that will never come. So that means that we should or we can calculate profit from a month or a yearly basis. So a reporting period can be as short as the owner requires. For example, if you had a look at stock brokers, for example, they may be recording, or they may have reporting periods of days or even hours at times. But every year, the business has to produce reports, and that is basically a taxation requirement. Historical cost is a principle that is quite heavily tested. It's often brought up in exams and SACs as well. So, historical cost principle states that transactions should be recorded at the original price, the original purchase price, as this value is verifiable by the source document evidence. Okay, so this is all about being able to produce reliable information, which we'll talk about a little bit later. So it applies particularly to assets, which have to be recorded at the original price, as this price can be proven. Any other valuation or resale, or any valuation such as resale value or replacement value, is purely an estimate and could be biased by the owner and by the owner's opinion. So therefore, we need to go with the original purchase price. Okay, consistency principle. This is obviously really important because it gives us the ability to compare results across different reporting periods. So, as it states there, that accounting methods used by the business should be kept the same from one period to the next. So this is all about making the information comparable. Now this is an important point here. The owner is able to change the accounting methods used. It's just that change must be disclosed so that so that users are not misled in any way. So the conservatism principle states that losses should be recorded when probable and gains only when they are certain. So this basically means that we are overstating or not understating our liabilities or expenses because they're obviously our economic sacrifices. And we are understating or not overstating our assets and revenues, which are obviously our economic benefits. This principle can be summed up really well by this sentence here. So it is far better to predict the worst and be pleasantly surprised than expect the best and then get a rude shock when the reality doesn't match the expectation. Finally, the monetary unit principle states that all items must be recorded and reported in monetary terms, that is in the currency of the country that the business is located, and that where the reports are ultimately going to be used. So this comes back to the comparability side of things as well. So just making sure that our reports are consistent and they are comparable between reporting periods. I'm going to ask you to now knock over review questions 1.3 just quickly, and then we'll move on to the qualitative characteristics.